Hey, welcome in everybody to another weekly review. I'm riding solo today. Quint is out enjoying spring break with his family, so you just got me today. But I'm going through and talking about a very, very busy week in the markets. And overall, if you just looked at the headline for the week, the market's been down. We've definitely had a pullback this week, and why is that? What's going on? Well, there's a lot of things going on around the world that are affecting our stock market. One being Israeli and Iranian conflict is heating up. So there was a bombing that Iran has blamed on Israel on a consulate building that they had. Iran has now said that they're going to retaliate, that there's not been necessarily a retaliation immediately, but they're going to retaliate. And the United States has obviously been caught in the middle of everything that's gone on in Israel. So there could be the potential of the United States getting more involved and dragged deeper into that war in the Middle East. Obviously, any type of war like that creates uncertainty in the markets. The markets don't like uncertainty, so that's causing some issues. Ukraine and Russia, on the other hand, they're having some additional issues. Our Secretary of State just came out this week and said Ukraine is on a path to join NATO soon. Russia doesn't like that, and Russia has actually said recently that they are in direct conflict with NATO and it could come to blows sometime soon. So you could see NATO start to get more involved in that war, which ultimately means the United States would probably get more involved as well, more money, potentially even have NATO troops on the ground in Ukraine fighting against Russia. So definitely something to watch out for. But what do those two wars have in common that's affecting us on a daily basis? Gas prices. So oil is now up to $86 a barrel, which means that the gas prices you're seeing at the pump are higher. I'm sure you've noticed over the last couple of months, they've just slowly crept up. Now they're in the high 3 levels around here in Lexington. So those gas prices are affecting things. And as we've talked about throughout this entire year, what's been the most important word? Inflation. So having higher gas prices, not necessarily good for inflation because gasoline affects a lot of other goods. It's obviously going to be something that the Federal Reserve is watching, and the markets are watching how the Federal Reserve reacts to those increases in inflation, because what this market is completely driven by is what's going to happen with interest rates. So inflation leads to what the Fed's going to do, leads to what are going to happen with interest rates. Now, the Fed came out in the last couple of weeks and said they're still going to have 3 cuts before the end of the year, but with some positive economic news, some high inflation numbers, and what we're going to talk about next, some high jobs data that could be in question, which is obviously a concern for the markets. And it's one of the reasons we've had a really a pullback this week. We've had some down days for sure, except for today. So what happened today to end the week? Jobs data. This has been a highly anticipated number that's coming out the first Friday of the month. We get jobs data from the federal government, and basically it tells us what new jobs were created in the United States. So new jobs, non-farm payrolls is what it's called, was 303,000. That's the big headline number that came out today. That was 100,000 over what expectations were. So that number was really high. That doesn't always mean a good thing. Typically, we would say more jobs, that means that's going to be positive for the markets. But in fact, the Federal Reserve is looking for jobs growth to slow down. They're looking for that slowdown so that inflation doesn't continue to rise or doesn't stay entrenched where it is, about 3% or a little bit higher. So higher jobs data is actually bad for the markets, except when that news came out this morning, the markets actually had a really good day today. So why has that happened? Well, when we looked into the numbers and dove in deeper, the more important number than just that headline new jobs number is the fact that wage inflation, wage growth, has actually not increased too terribly much with these new jobs that have been created. So the expectation was 0.3% wage increase. That came in line with expectations. If we would have saw that number a little bit higher than expectations, we could have seen a market sell-off today. But I think because it came in line with those expectations, we're not seeing the big market sell-off reaction to that headline number of 100,000 more jobs than were expected. Okay, so what does this all mean? We've had a week of pullbacks. We've had a market that's going down. we see it as an opportunity. We do not think this is a moment to hit the panic button or to be freaking out about a sell-off in the market. This is how healthy bull markets work. There should be pullbacks. There should be times where the market sells a little bit, contracts a little bit, and then eventually goes off to the races. It works like stair climber on the way up in a bull market, and then you take an elevator ride down every once in a while. It's important to have those. It's healthy to have those. There's going to be news headlines all the time that you could point at and say, oh, well, this means that this bull market run is over. This means we're going down south. Those have coincided with this week, but we still see it as a great buying opportunity, especially in some of the rate-sensitive areas like small caps, something we've talked about on many recent episodes of this review and what we've talked about in our newsletter. Places that are interest rate sensitive, we do think things like wage inflation, overall inflation are slowing, are mitigating, and that's going to lead to interest rates coming down and the market continuing to do well, but doing well maybe in some of the different areas that have not done so well throughout the rest of the year and in last year as well. So I hope you guys enjoyed this market review and enjoyed the newsletter that we've been sending out. Make sure you have tell your friends about it. Feel free to forward our newsletter on to anybody that would like to learn a little bit more about what's going on in the markets and what our views are. Happy opening Keeneland weekend to anybody that's celebrating, and I hope you guys have a great weekend out there.